Welcome to this week's Explainer. We are looking at the market briefing for the week of 13 July to 17 July 2026.
The defining headline this week was exactly this. Iran war escalation sends Brent crude surging 11.7% and drags Nasdaq into a 2.9% weekly slide.
So this geopolitical shock created a pretty clear divide in global equities. Over in India, the markets actually showed some solid resilience. You can see the Sensex closed at 78,151.45, posting a gain of 0.8%, and the Nifty 50 settled at 24,334.30 with a 0.5% increase. But if we look at the US, it was a completely different story. We witnessed a heavy tech sell-off. The S&P 500 finished down 1.6%, the Nasdaq took a significant hit, falling 2.9%, and the Dow dropped by 0.9%.
Section 1. The domino effect. Okay, let us dive into this and examine the step-by-step mechanism that drove these market movements.
We can literally track how this overseas conflict translated into domestic market action through a simple four-step chain. First, U.S. strikes on Iran caused the conflict to widen regionally. Second, that geopolitical tension directly impacted energy markets, causing Brent crude to jump to $84.91 a barrel. Third, with oil prices surging like that, inflation risks are suddenly back on the table, which makes the Federal Reserve much more likely to hike interest rates. And fourth, despite that global risk-off mood, strong domestic buying here at home was enough to lift the Sensex by 0.8% for the week.
Section 2. Rates and your EMIs. Let us transition to how these global macroeconomic events actually localize and affect your personal borrowing costs.
We are basically looking at a tale of two central banks right now. In the U.S. reality, the Fed had previously held rates at 3.50 to 3.75% back on 17 June 2026. However, the current oil spike is putting unique pressure on them, raising the odds of a rate hike coming in July. Conversely, in the India reality, the RBI held its bank lending rate at 5.25% on 5 June 2026, keeping a firmly neutral stance.
So, what does this all mean for your wallet? The clear verdict is that your home loan EMI stays unchanged for now. But keep in mind that a Fed hike could still shift the RBI's next move. While things are completely stable today, future rate hikes ultimately translate to increased costs for borrowers down the line.
Section 3. Business and Tech. Next, we will transition to our corporate spotlight cards to examine some specific company earnings and technology updates from the week.
Starting with domestic giants. On 17 July, Reliance Industries announced their Q1 FY27 results. They posted a net profit of 20,946 crore rupee. More notably for market optimism, their revenue increased 10.6% to 3.11 lakh crore rupee. That top-line gain was a major factor contributing to the positive domestic sentiment we saw across the Indian indices.
In sharp contrast, over in the US, we are looking at a steep drop of 8.6%. That figure represents the plunge in Netflix shares after hours on 16 July. Their Q3 revenue guidance of $12.86 billion missed market estimates, which prompted a swift and punishing sell-off in their stock. Now, what is really interesting about this slide is the shift happening in the artificial intelligence hardware landscape. Meta's Iris AI chip, which was built in collaboration with Broadcom, successfully passed testing on 17 July. Production begins in September 2026. This really highlights the push by major hyperscalers to develop their own custom AI silicon, even as NVIDIA GPUs still handle everything else in the broader AI infrastructure market.
Section 4. Commodities and what is next. Let us move into our final data sets and map out the events to watch for the upcoming week.
Looking at commodities and currencies, you can see ICE Brent crude closed at $84.91 a barrel, up 11.7%. This stronger oil price directly pressures the Indian rupee, which closed at 96.33 cents to the US dollar, a 1.0% drop for the week. Gold traded at $3,998 an ounce intraday, falling 3.4% as rising Fed rate hike odds weighed pretty heavily on the metal. Finally, Bitcoin closed at $63,788.52, edging up just 0.9% as broader geopolitical risks dulled crypto appetite.
We have two major dates on the radar to watch. On 18 July 2026, we get Q1 results from HDFC Bank, ICICI Bank, and Axis Bank. These numbers will test whether strong bank earnings can continue to support the Indian market rally. Then, on 29 July 2026, we have the FOMC rate decision. This will be the first Fed call since the oil spike, and markets will be watching closely to see exactly how they respond to the renewed inflation risks.
Geopolitically, the main factor to watch is whether the Strait of Hormuz stays open. A prolonged blockage there risks pushing Brent crude past $90 a barrel, which would squeeze India's import bill further.
Here is your takeaway. Bottom line, Iran-driven oil at $84.91 a barrel is the swing factor. It lifted reliance and bank earnings optimism at home, but it's what's rattling Wall Street and gold.
As we watch the week ahead, the central question remains whether global central banks will be forced to sacrifice growth to tame a new wave of oil-driven inflation. That concludes this week's Explainer. Follow @KatharinDileep on Instagram and subscribe on YouTube @KatharinDileep.